On January 1st, 2026, today, we wake up to a financial reality that Robert Kiyosaki warned us about just days ago. A reality where silver, having already surged over 150% in 2025, sits poised at the edge of something that most investors said was impossible: $200 per ounce. Let me be absolutely clear about what happened in the final week of 2025. The author of Rich Dad, Poor Dad, a man who bought his first silver back in 1965, posted 4 words on X that sent shockwaves through precious metals markets already experiencing unprecedented volatility. $200 next. The prediction nobody wanted to believe. On December 29th, 2025, Robert Kiyosaki responded to silver breaking $80 per ounce with that simple, devastating question. Not a maybe, not a possibility. A prediction that felt less like speculation and more like inevitability to anyone paying attention to what he'd been saying for months. But here's what makes this moment absolutely critical. Just one day earlier, on December 28th, Kiyosaki had issued a stark warning that completely contradicts what most people think he was saying. "Silver bubble about to burst," he wrote. "I love silver. I bought my first silver in 1965, but is silver bubble about to burst?" FOMO, fear of missing out. Mania crash is coming. If you're planning on investing in silver, be patient. Wait for a crash, then go or no. Think about that timing. On December 27th, he celebrated smart silver stackers as the metal approached record highs. On December 28th, he warned about FOMO mania and advised patience. On December 29th, after silver broke $80, he posted $200 next. And then, precisely as he predicted, silver crashed 11% in its steepest single-day plunge since September 2020, vindicating his warning while simultaneously confirming his long-term target. This isn't some internet personality throwing numbers at a wall hoping something sticks. This is a man who has been stacking silver for 60 years, watching the exact scenario he predicted unfold in real time. The year that changed. Everything silver entered 2025, trading around $29 per ounce. By December 30th, it touched a record high of $86.62, a gain that made it one of the strongest performing assets in modern financial history. Not just stronger than gold, stronger than virtually every major stock index, stronger than most currencies, stronger than real estate. A 200% gain that rewrote every analyst's forecast and forced Wall Street to scramble for explanations. But Kiyosaki wasn't surprised. In fact, he'd called for silver to reach $70 before the end of 2025, a forecast that materialized exactly as he predicted. When silver broke $70 in late December, he didn't celebrate. He warned. Because Kiyosaki understands something that speculators chasing momentum completely miss. The real move hasn't even started yet. Today, January 1st, 2026, as I'm speaking to you, silver trades around $76 per ounce after violent swings that saw the metal surge, crash, and recover within 72 hours. That volatility isn't weakness. That's the market trying to digest what comes next when the structural factors that drove 2025's historic rally accelerate into 2026. The hyperinflation? Warning. Kiyosaki's $200 prediction doesn't exist in a vacuum. It's grounded in a warning that makes most investors deeply uncomfortable. Hyperinflation is coming, and the US dollar is entering a phase of accelerating debasement that will force silver prices exponentially higher. Silver over $70? Great news for gold and silver stackers. Bad news for fake money savers. Kiyosaki wrote on December 27th, "I am concerned $70 silver may signal hyperinflation in 5 years as the fake dollar keeps losing value." This is the part where conventional financial analysts dismiss Kiyosaki as an alarmist. They point to Federal Reserve data. They reference central bank independence. They argue that hyperinflation, defined as monthly inflation exceeding 50%, remains an extreme tail risk for the United States. But Kiyosaki isn't predicting Weimar Germany or Zimbabwe. He's predicting something more insidious, a sustained erosion of dollar purchasing power that forces real assets, like silver, into a repricing that reflects decades of monetary expansion finally catching up to reality. And when you look at what happened to silver in 2025, that repricing has already begun. The industrial demand catastrophe. Here's what makes Kiyosaki's $200 target exponentially more credible than skeptics want. To admit, industrial silver demand is surging at precisely the moment supply chains face unprecedented restrictions. Demand for silver and solar panels grew by 64% last year, surpassing jewelry as the single biggest source of demand, even though solar represents only 9% of global electricity production and approximately 2% of total energy production today. Think about that trajectory. Global solar capacity already exceeds 1,500 gigawatts and continues growing at double-digit rates. Electric vehicle production accelerates globally. AI data centers require massive amounts of silver for electrical components and cooling systems. Semiconductors for military electronics, consumer devices, medical equipment. All of these applications require silver. All of these sectors are growing, not contracting. The Silver Institute project's cumulative supply shortfalls could exceed 1.5 billion ounces by 2030, as renewable energy demand alone reaches 510 million ounces annually. One analyst noted that prices above $120 per ounce may be required either to incentivize mine output growth or to encourage investors to sell holdings to meet industrial demand. Industrial applications now represent between 50 and 60% of total silver demand. This isn't speculative investment driving prices. This is real-world manufacturing, consuming physical metal that cannot be easily substituted, and tomorrow's industrial requirements dwarf today's consumption. The supply crisis. Nobody solved. The global silver market has operated in structural deficit for 5 consecutive years. In 2025 alone, demand reached 1.24 billion ounces, while supply lagged at 1.01 billion ounces, a 230 million ounce shortfall. Where did those extra ounces come from? They came from inventories that have been bleeding out month after month. COMEX stocks are down 70% since 2020. Shanghai inventories sit at 10-year lows. And on January 1st, 2026, today, China's new licensing framework for silver exports takes effect, fundamentally restricting access to the country that controls 60 to 70% of global refined silver supply. Spot silver premiums in Shanghai climbed above $8 per ounce over London prices on December 24th, the widest spread on record, as buyers scrambled for physical metal amid supply constraints. China consumes over half of global industrial silver, primarily for solar panel manufacturing, electric vehicle production, and electronics. The country that controls refining infrastructure gets to decide who benefits from that infrastructure. Approximately 70% of silver is produced as a byproduct of base metal mining, meaning dedicated silver operations cannot quickly respond to price spikes. Building new refining facilities takes years and hundreds of millions in capital investment. The math doesn't work. The supply chains cannot adapt fast enough. The institutional money that changes everything. One contact in Utah asked how to execute a $100 million silver purchase. Think about what that signals. This isn't retail speculation. This isn't momentum chasers buying ETFs. This is institutional capital positioning for something that hasn't happened. Yet, the moment when silver's supply crisis intersects with exploding industrial demand under conditions where governments are actively restricting exports. Google searches for how to buy silver recently hit a new all-time high. Historically, spikes in search interest have lined up with major turning points. We saw it in 2011, we saw it in 2020, and now 2025. Meanwhile, retail investors are selling into dips, exactly when disciplined stackers and large institutional buyers are adding. The gold to silver ratio continues falling, dropping below 65. Historical normal levels were closer to 33 to 35 in eras when global stockpiles were abundant. Today, stockpiles are gone, yet the ratio remains historically elevated. If silver simply returned to historical ratios, not even accounting for supply deficits or surging demand, the metal would need to double from current levels. Why the $200 target isn't crazy. Major financial institutions are now publishing forecasts that would have been dismissed as lunacy 12 months ago. Goldman Sachs expects average silver prices in 2026 to range between $85 and $100 per ounce, calling silver the primary strategic metal of the green transition, and arguing that structural supply deficits will make sustained moves below $70 increasingly difficult. UBS targets silver around $95, expecting the metal to continue outperforming gold based on Federal Reserve rate cuts, weakening the dollar and encouraging institutional investment. Even conservative forecasters like Commerzbank expect prices to stabilize around $80 to $85 before resuming their upward trend. And then there's the technical picture. Silver broke out of a 40-year consolidation pattern in 2025, with the $50 level serving as significant resistance since 1980. The cup and handle pattern that formed over 4 decades suggests a measured move that could push silver between $250 and $300 if the breakout follows historical precedent. Kiyosaki's $200 target for 2026 suddenly doesn't look extreme. It looks like the first major psychological barrier on a much longer journey. Well, Kiyosaki sees that others. Miss Robert Kiyosaki has been warning about fiat currency debasement for decades. He bought gold, silver, Bitcoin, and Ethereum, not because he is a doomsayer, but because he understands that when governments print money without constraint, that money loses purchasing power against finite assets. It's not complicated, it's mathematics. His warning about waiting for crashes before buying isn't pessimism, it's discipline. He watched silver surge to $86 and crash 11% within hours. He He knows that markets driven by FOMO create opportunities for patient investors who understand the difference between momentum and fundamentals. I believe silver will reach $500 from $100 within a year, Kiyosaki predicted, calling silver hotter than gold. That statement sounds insane until you consider what happens if industrial demand continues surging while China restricts exports and global inventories approach zero. Then it starts sounding less like hyperbole and more like inevitable consequence. The Federal Reserve conducted 3 rate cuts in 2025. Markets are pricing additional policy easing in 2026. Every rate cut weakens the dollar. Every dollar debasement makes hard assets more attractive. And silver, trading at a fraction of gold's price while facing supply deficits gold doesn't experience, becomes the obvious value play for investors who understand what's coming. The reality we face. Today, January 1st, 2026, we enter a new phase in precious metals markets. China's export restrictions take effect. Industrial demand continues accelerating. Global inventories sit at multi-year lows. Institutional money positions for moves most retail investors haven't priced in yet. And Robert Kiyosaki, who bought his first silver 60 years ago, who called $70 before the end of 2025, who warned about FOMO mania days before the crash, says $200 is next. Maybe he's wrong. Maybe supply constraints ease. Maybe industrial demand plateaus. Maybe governments suddenly embrace fiscal responsibility and central banks stop expanding balance sheets. Or maybe, just maybe, a man who's been stacking silver since 1965 understands something about how this ends that most people aren't ready to accept. The question isn't whether Kiyosaki's prediction sounds extreme. The question is, what happens to silver if even half of what he's warning about comes true? What happens if industrial demand grows another 60%? What happens if China further restricts exports? What happens if investors finally realize that holding depreciating currency makes 0 sense when you can hold an asset the world desperately needs and cannot easily produce? Kiyosaki answered that question on December 29th with 4 words that are either the prediction of a lifetime or the obvious conclusion everyone should have seen coming. $200. Next, today, as silver trades around $76 per ounce under conditions that have never been more bullish for the metal's long-term prospects, that question doesn't feel speculative anymore. It feels inevitable.